Is Renault quietly becoming Europe's new automotive giant? While rivals stumble under tariffs and EV chaos, Renault just pulled off a 5% sales jump in H1 2025, selling 710,000 cars and rising to a 7.5% market share. From hybrid Clios and Dacia EVs dominating the East to smart pricing shielding it from global shocks, Renault is outpacing the industry, and it's not slowing down. But can this momentum survive rising costs and tough EU emission rules? And what does that mean for your next car? Stay with us. We're breaking it all down. Don't forget to subscribe for more real insights that drive your decisions. Renault Group delivered a strong performance in H1 2025, selling around 710,000 vehicles across Europe, an increase from 676,000 units in H1 2024, according to data from ACEA. This growth reflects improved demand across core markets, supported by the successful launch of new models. The company's market share increased to 7.5%, up from 7.2% the previous year, firmly positioning Renault among the top 3 automakers in Europe, behind Volkswagen Group and Stellantis. The boost was largely driven by popular models like the Clio, Captur, and Dacia's budget-friendly lineup, all of which performed well despite ongoing market pressures. Renault's upward trend underscores its strategic momentum in an increasingly competitive European auto industry. Renault's success in the first half of 2025 was driven by standout models across segments. The Renault Clio, refreshed in Q1, sold over 150,000 units, becoming the second best seller in France and third in Spain. The Captur hybrid followed with a 20% year-over-year increase, boosted by strong demand in Italy and Germany, and helped by smoother logistics. Meanwhile, Renault's budget brand Dacia played a vital role. The Sandero held its place among Europe's top 5 bestsellers, with nearly 130,000 units sold, while the Dacia Spring EV posted a 12% sales rise, fueled by new Eastern European subsidies. These results underline Renault's ability to deliver across price points, from affordable EVs to smart hybrids and best-selling compacts. In H1 2025, Renault Group recorded a 9% increase in hybrid and electric vehicle sales across Europe, with strong contributions from the Megane E-Tech Electric and Austral Hybrid, especially in urban hubs like Norway and the Netherlands. The Dacia Spring EV added momentum in Romania and Hungary, supported by local government subsidies. Despite this electric push, Renault maintained flexibility. 48% of its European sales still came from gasoline or diesel models. By offering a mix of EVs, hybrids, and ICE vehicles, Renault successfully captured a broader customer base, including buyers hesitant to switch fully to electric. This balanced powertrain strategy allowed Renault to adapt to varying regional needs without losing market share or affordability. Renault continued to dominate in France, its core market, with a 6.2% sales rise in H1 2025, led by strong demand for the Clio, Captur, and Austral. In Germany, sales climbed 4.5%, supported by growing hybrid interest and fleet deliveries, while Dacia models gained traction with first-time buyers. Across southern Europe, including Spain, Italy, and Portugal, Renault achieved nearly 8% growth, fueled by the success of the Dacia Sandero and Renault Arcana. The most impressive gains came from Eastern Europe, where countries like Romania, Hungary, and Czechia posted double-digit increases, thanks to strong Dacia performance and improved dealer coverage. This broad regional success underlines Renault's localized strategy and brand versatility. According to the ACEA report, July 2025, the European auto market expanded by 3% in the first half of 2025, aided by smoother supply chains, though concerns around inflation and EV affordability persisted. Amid these challenges, Renault stood out by adopting a mid-range pricing strategy, offering value without compromising innovation. This allowed the brand to sidestep rising EV costs that impacted buyers across Europe. Unlike competitors like Volkswagen, which scaled back EV forecasts due to US and China tariffs, Renault kept its edge through localized production in France and Spain, shielding itself from global trade volatility. This efficient cost structure and targeted pricing helped Renault outperform the industry average while maintaining strong momentum across its lineup. Enjoying this? Subscribe now and tap the bell for updates. Renault remained largely unaffected by the 15% US tariffs on EU auto imports, introduced in February 2025, due to its minimal exposure to the American market. Unlike peers scrambling to adjust, Renault had already pulled back from direct China operations years earlier, limiting its vulnerability to Beijing's retaliatory tariffs. This early shift allowed the company to focus on core European regions and fast-growing North African markets, both insulated from global trade tensions. While other automakers faced costly rerouting and pricing pressures, Renault's tight regional footprint and strategic withdrawal from volatile zones gave it a clear resilience advantage. That foresight now translates into market stability and uninterrupted growth in a turbulent global environment. Renault's Renaulution plan gained serious traction in the first half of 2025, delivering a 6% reduction in production costs through smart platform sharing and component sourcing in Eastern Europe. The brand also scored big on innovation. The all-new Scenic E-Tech Electric, launched in May 2025, already secured 20,000 pre-orders, pointing to strong momentum for the second half. On the tech front, Renault is pushing hard into smart mobility, with over 35% of new vehicles featuring Google-based infotainment systems and over-the-air update capability. This triple focus on cost control, EV product development, and connected car tech proves Renault isn't just playing catch-up. It's reshaping how value, innovation, and user experience come together in today's car market. In H1 2025, Renault led European automakers with a solid 5% sales growth, clearly outperforming the market average. Volkswagen, still Europe's largest car maker, managed only 1.2% growth, weighed down by tariffs and a sharp reduction in EV targets. Stellantis posted a respectable 3.4% rise, though momentum appears to be flattening. Meanwhile, Toyota grew 2.8%, thanks to its strong hybrid lineup, but continued to lag in the fully electric segment. Renault's edge came from a smart mix of pricing strategy, local production, and balanced powertrains, allowing it to gain ground as competitors faced structural and trade-related challenges. The numbers show a clear shift. Renault is not just keeping up, it's setting the pace. Despite strong growth in the first half of 2025, Renault faces critical challenges ahead. Rising raw material prices, especially for lithium and nickel, could squeeze EV profit margins in the second half. Budget-friendly models like the Dacia Spring EV may require further cost reductions to stay competitive against aggressive Chinese imports flooding the European market. On the regulatory side, the EU's 2026 CO2 targets are fast approaching. To avoid penalties, Renault must ensure that electric vehicles make up at least 25% of its European sales. Balancing affordability, profitability, and compliance will be key. The next few quarters will test Renault's ability to maintain momentum while navigating financial pressure and tightening environmental standards. Renault is projecting 8 to 9% full-year growth in 2025, assuming macroeconomic stability continues through year-end. This optimistic forecast is backed by a strong product pipeline and rising consumer demand. Two major vehicle launches are lined up for Q3 and Q4, the Rafale SUV aimed at style-conscious families and the Cardian City car, designed to attract younger urban buyers. Both models reflect Renault's strategy to blend innovation with affordability, targeting fast-moving segments in both Western and emerging European markets. With demand rising and market share expanding, Renault appears well-positioned to sustain its momentum. However, much will depend on global economic trends and how effectively it navigates pricing, supply, and regulatory dynamics. In the end, Renault isn't just surviving the chaos, it's quietly winning the race. While others struggle with rising costs and trade war shocks, Renault is growing, adapting, and turning smart moves into solid gains. But can it keep this up as EU rules tighten and competition heats up? And will this reshape the kind of car you drive next? Drop a comment. We want to hear your take. Don't forget to like, subscribe, and hit the bell so you never miss the stories that matter. Your next drive might just depend on what happens next.